I'm Katy Thoma, President and CEO of the Chico Chamber, and today I'm here with Karli Olsen, who is the Senior Manager with Coe Isom. And I met with Karli and we did a video a couple months ago and talked about PPP and some of the stimulus opportunities there were for businesses. And she has some updates. We had a conversation a couple weeks ago, and she mentioned some of the stimulus provisions, one of them being the employee retention tax credit. And it's very advantageous for some of the businesses. So I asked Karli if she would do another video with me, bring us up to date, give us some detail on what that is, and some additional changes to the to what's happening in 21 and 22 tax years. So Karli, thanks for joining me this morning.
Yeah, thanks for having me back, Katy.
So do you want to start talking about the employee retention tax credit, or the ERTC, as you call it?
Sure. And I have a couple of slides just because it is a fairly technical provision, just to make sure that people can keep track, because there were some changes made for the 2020 tax credit that will make that eligible for more employers. And then there are some differences if you're going to claim it in 2021 instead. So let me go ahead and share my screen. I'm on the clock, so user error. Let me try that again.
So one of the good things too that Karli, oh, here we go.
This will work. I think this gets us to the point, and at least it will show the examples too as we're walking through
Sure.
it. So the employee retention tax credit is a credit that allows you to claim payroll tax credit for wages that you pay to your employees during either 2020 or 2021. Most people didn't look too closely at this when it first came out with the CARES Act back in March, because if you got a PPP loan, you were not eligible for this credit. So with the Stimulus Act that just passed last month, they changed that to where you can now claim this ERTC and still claim or still have that PPP loan in 2020 and also the second draw for 2021. So there are some differences between the 2020 credit versus 2021. So just kind of put a side by side together of the criteria, just so people can keep track. I'm definitely a visual person, so it's a little easier for me to see this in table form. But for 2020, the maximum credit that's available to employers is a $5,000 tax credit per employee, and it's up to $10,000 in wages per employee for the year. So if you have employee A earned $15,000 in wages during the year, then you would have a maximum $10,000 wage limit, have a 50% tax credit against those wages, which is a $5,000 credit per employee. For 2021, that got expanded quite a bit, actually. Instead of $10,000 per year per employee, it's actually per quarter. So in Q1, you have a $10,000 limit, and in Q2 for the same employee, and it becomes a 70% tax credit instead of a 50% tax credit. So in 2020, you get a maximum potential credit of $5,000 per employee. In 2021, it's $7,000 per quarter, or $14,000. And I know a lot of employers that we've talked to were concerned about being able to claim this because they had losses, so you can't really use tax credits generally when you have a loss for the year. But this is a payroll tax credit. So it's claimed on your quarterly payroll tax filings. And if your credit is exceeds the amount of your payroll taxes, it's actually refunded back to you as a difference. So you can immediately get a cash benefit for this payroll tax credit. The employers that qualify, similarly between the 2 years, is that they had to have a partial or full shutdown due to a government order. So that could be local, state, or federal government order. We all know in California, we've had a stay-at-home order in place since March 19th of 2020 that has affected, primarily restaurants, but other businesses that have had to be partially shut down for pretty much the entire year. Museums, gyms, hair salons were shut down for part of that time. And so, especially for restaurants is where I've seen a big benefit for this. You could claim this credit for the entire qualifying period for 2020. If you haven't been partially shut down, you can still claim this credit if you had a reduction in your gross receipts of at least 50% in any quarter of 2020 compared to that same quarter in 2019. So if you look at April 1st to June 30th of 2020, and your revenue was down by half compared to that same period in 2019, then you could qualify for this credit during that period. In 2021, that was actually expanded to include more businesses. So in 2021, it's only a 20% reduction in gross receipts, which I think a lot of our businesses will have had and could qualify for. The last main eligibility piece that you want to look at is the number of employees that you have. So in 2020, the largest benefit was available for employers that had fewer than 100 average full-time employees in 2019. So this is all looking at your 2019 employees. Most of our businesses, locally are probably going to fall under that threshold. So there are quite a few that should qualify there. And then in 2021, that was actually expanded to be anyone with less than 500 employees. And so there are other ways to qualify. Again, it's a very technical, nuanced provision. And so I think what's important for a lot of our members to know is, did you have a partial or full shutdown during the year due to a government order, or did you have a significant reduction in gross receipts? And did you pay employees during that time? And if you can answer yes to those, then you should reach out to your payroll provider or CPA or try to get additional information to make sure you qualify and help with the calculations.
This really truly is a motivator for retention and really does reward those employers that kept their employees. So this could have significant financial positive impact on small business owners. So thanks for explaining that. I know you and I've had a couple conversations about it. It's highly detailed, and I appreciate you providing these tables. I think that'll be really helpful to the folks that are viewing this. Looks great.
Yeah. And then just to have the visual, did a quick example of 2020 and then also 2021. So if you have a business that was shut down due to a government order and they have, they meet the other eligibility criteria, they could have wages paid to 3 employees of, the 3 employees are listed there, A, B, and C. We paid $8,000, $10,000, and $15,000. So again, the credit in 2020 was limited to $10,000 in wages per employee. And so we have $28,000 in eligible wages in this example, the $8,000 from employee A, the full $10,000 for employee B, and then employee C is limited to $10,000. A 50% tax credit against that $28,000 in eligible wages would be a $14,000 payroll tax credit. And then if you compare that to 2021, in this case, you could have, since it's separate quarters that qualify, you could have eligible wages in Q1 for a group of employees and then a separate set of eligible wages in Q2. So just as a good example to compare to the 2020 credit, if you jump down to the Q2 calculation, our total qualified wages are $27,000 in that example, the $7,000 from employee A, a maximum of $10,000 for employee B, the $4,000 for employee C, and the $6,000 for employee D. $27,000. So that 70% tax credit in 2021 is an $18,900 ERTC for just 1 quarter of wages in 2021.
Wow. That's terrific.
Yeah. Let me stop right there for a minute with my sharing.
So
that was pretty technical.
Because it is so detailed and there's a lot of nuance, maybe not necessarily nuance, but qualifications that business owners should reach out to their payroll provider and to their CPA to make sure that they're getting the full benefit.
Yeah, I'd say absolutely. I mean, we've been working with a lot of employers this last, 4 weeks on this, and I've seen credits ranging anywhere from, $50,000 to a couple $100,000 in payroll tax credits. And they're pretty significant at a time where if you did already pay all your payroll taxes during the year, it's a pretty significant refund you could be getting back, which would be a large cash infusion at a time you might not be expecting one. And some employers couldn't keep up with their payroll taxes this past year, and so it's a great way to get caught back up and get yourself really, set and ready to go for this next coming year.
Well, that's great. Very helpful information. So are there any other things that you would like to share with us? Any other, I know there's some changes in 2021 as far as deductions go or credits that can be taken.
I'm sure there were a couple changes to some tax credits that would primarily affect businesses. I kind of left out most of the individual ones for purposes of our conversation. But a couple of the provisions that were extended or changed with the Stimulus Act. First would be I think it's the Families First coronavirus leave credits. And so it's typically the FFCRA credits. Those were set to expire at the end of December 31st, 2020. So those credits are extended to March 31st of this year, and those are available to employers, but employers are not required to provide paid leave to employees with that extension. It's just they can provide paid leave for employees that qualify, and that credit would still be there to help offset those wage costs.
Great.
So the other provisions that have changed for this year is meals. So typically when you buy a meal for business purposes, it's only a 50% deduction that you get on your taxes for that meal. So for 2021 and 2022, if you buy a business meal from a restaurant, then you actually get 100% deduction for that. So definitely a benefit to buy from local restaurants and make sure that you can expand your deductions for that, and also help stimulate our local restaurants at the same time. Additionally, the solar tax credit, if you've taken advantage of that or if you're looking to, that credit has been decreasing for the last couple of years. And so in 2020, the credit that you could claim for solar property was 26%. And that same credit level is maintained now for 2021 and 2022, rather than going down like it was previously scheduled.
Wow.
And then probably one of the other ones that we'll see a lot of people taking advantage of is the ability to carry back net operating losses. So if your business has a loss and that flows through to you personally and you overall have a loss, you can now take that loss and carry it back 5 years to claim refunds for taxes you paid in previous years. You still have the ability to elect to carry it forward like you did before, but for 2018, 19, and 2020, you can now carry those losses back 5 years.
Wow, lots of changes, lots of changes. Well, thank you for bringing your expertise today, and I'm looking forward to hearing from some of our members, and because I know that this is information that I'm sure many of them don't know. I love the change in the 100% deduction in business meals for restaurants. So, I'm hoping that many of those employers will, maybe they'll take care of their employees once a week at least and go buy lunch for the whole crew. And because I know there's not a lot of business meetings going on this year, but certainly feed their teams. So Karli, thank you for this information, and we look forward to meeting up again. I know that the rules keep changing and the laws keep changing. So thank you for giving us an update on ways in which employers and business owners can take advantage of all that the government is offering. So thanks and take care.
Thanks, Katie.